Today's tape had one driver: peace. The Strait of Hormuz reopened, and US-Iran peace talks pulled the war premium right out of oil. WTI slid to 70.42, and stocks snapped back on the easing geopolitical risk. That's the headline driving today's session. We'll walk every group from there, and close on the divergence that stole the day. Applied Materials, AMAT, a green close up 10.8%, while semiconductors whipsawed, 13 down, 12 up. Today's #1 ranked stock from SignalFinder Pro's Best of Best. SPX and the Nasdaq both snapped back today on easing geopolitical risk and South Korea's AI investment announcement. But the weekly structure is still under pressure. There's a gap sitting at 74.75 directly overhead on SPX, and that's the near-term magnet. VIX dropped 4% and broke a falling wedge, which actually supports a gap fill attempt. QQQ signals tried to flip bearish by Friday's close and couldn't seal it. Genuinely mixed. Worth flagging from the readout, SpaceX officially joins QQQ on July 6th. Dollar and bonds. DXY eased to 101.11 as cooling energy prices and US-Iran peace talks took some of the hawkish pressure off. The 10-year held near 4.38%, still below its 4.45 danger zone, so the macro parameters are sitting in a cautious neutral. TLT broke below the $84 support level during the yield spike, and that's the structural line to watch on any reversal. The dollar's easing, but yields are staying sticky. Those two signals don't point the same direction, and that's what the readout is sitting with. Energy's reading is bearish. WTI settled at 70.42, and XLE closed at 53.58, in a confirmed bearish crossover. The Strait of Hormuz reopening is what's dissolving the war premium that had been built into prices. That geopolitical bid is gone. What's keeping a structural floor in place? U.S. physical inventories are still low, which cushions the downside. Bearish trend, but not in freefall. Metals are split right down the middle. Gold and silver are stuck in lower lows, downtrends. The scan has them flagged. A hawkish Fed stance plus easing Iran tensions are unwinding safe haven demand. Pre-market this morning, gold and silver were still down while everything else was bouncing. Copper's a different story. It's holding a higher high structure, which keeps the global growth signal intact. Mixed read overall. Precious metals dragging, copper holding the line. International markets are mixed. EFA held above its 50-day moving average, and emerging markets, EEM, is actually the global leader, up 26.35% year-to-date. Japan's got real headwinds. Yen volatility plus Bank of Japan rate hike pressure weighing on the export sector. Here's the speculative flag the system picked up from Hong Kong. The top ETF by inflows right now is a 2x levered Hynix ETF, getting more flow than any index fund there. That kind of froth tends to show up late in a move. Bitcoin's chart is clear, and it's not bullish. The weekly confirmed a bear market, first closed below the 200-week moving average, and there's no bottom signal on the weekly chart. Bitcoin is down 54.25% from its peak. ETF outflows are confirming the late cycle pressure. The next structural target to watch, the 300-week moving average near 54,600. Any bounce from here reads as a counter-trend move until a real reversal signal shows up. Best of Best ingested today's full market data and narrowed it down to 103 symbols on the ranked shortlist. That's the engine filtering the noise and surfacing what's actually holding structure. Top sector right now? Industrials, XLI in the lead. Technology, XLK, right behind at number 2. Real estate, XLRE, makes it to 3, but it's in lagging territory. And we're about to get to the #1 ranked ETF and the #1 ranked stock. Sector rankings, industrials at the top. XLI closed up 0.86%, holding a leading signal. Technology, XLK, right behind at number 2, up 2.37%, also leading. Real estate, XLRE, rounds out the top 3, but it's down 0.71% and sitting in lagging territory. Two sectors with genuine structure at the top, one making the list without confirming. #1 ranked ETF SOXX, the iShares Semiconductor ETF, up 4.14% today, closing at 614.35. Here's what makes this a divergence readout. The engine scored SOXX at the top on a week when semiconductor ETFs were swinging 13% down, then 12% back up. The system's detecting structural leadership through the pullback, not chasing the tape when it's green. Signal state on SOXX is watch. Applied Materials, AMAT, is the system's #1 ranked stock, And today's close is exactly why the divergence engine lights up on it. AMAT was up 10.82%, closing at 694.64, green, while the Nasdaq was collapsing intraday. That's textbook relative strength. The semiconductor equipment bellwether holding a green close and a down tape. AMAT's signal state is watch, and that's the read the ranking engine surfaced today. Quick system readout for the session. Index is mixed. SPX snapped back, but that 74.75 gap is still overhead. Dollar at 101.11, 10-year at 438, below its danger zone. Energy bearish, with WTI at 70.42 and XLE in a bearish crossover. Metals split. Gold and silver in downtrends, copper holding structure. EEM up 26.35%, leading internationals. And Bitcoin confirmed a bear market, down 54.25% from the peak, first close below the 200-week MA, no bottom signal. Best of best shortlisted 103 symbols. XLI leads the sectors. SOXX is the #1 ETF. AMAT is the #1 stock. Verify both live in SignalFinder Pro. And remember, this is educational, not financial advice. Do your own homework.